So they had kind of taken a chance on you, and you took a chance on Lyft.
Absolutely.
What did you see?
Yeah, so on the very first pitch that they came in with, it's a pitch that I still have, and I like showing it to Stanford students. But they talked a lot about why transportation was so critical to the fabric of the United States. And they started off with canals, and they went to railways, and then they showed highways, and how actually the physical landscape of the country changed and the economy changed as a result. And the question that John and Logan posed that I thought was really fascinating was, what's that next transportation revolution? And do you want to be a part of it? And my answer to that, and Mike's answer to that time, was absolutely yes. There was nothing else in the market that was a transportation revolution.
Uber already existed at this point, though, right?
No, it did not exist at the time that we invested. So it was still.
And I think it was a black car service at the time, so it wasn't about ride sharing.
Yeah, so when Uber first launched, actually, it was Uber Taxi, and then they became Uber Black. And so even when they launched, there was still a pocket of time where the only comp that we actually could find in the market was Zipcar. And so that's what we were comparing it against. And sort of, is that the market? Is there something bigger than that?
So, Mike, what did you see?
Well, when you invest as crazy too early as we do, you have to have an opinion about where things are going. And so we'd been early in the sharing economy with Chang and TaskRabbit, companies like that. And we had this idea that the internet lets you locate something that's unused, and the smartphone would let you locate something that's unused and moving. And so we were just looking for network transportation. And when Logan and John walk in the room and describe their vision for how things could be, we're like, okay, those are our guys.
Still, this is a company that's losing almost half as much money as it is making. I mean, they brought in $2 billion in revenue last year. They lost $900 million in revenue. How do you justify that to public market investors who are going to buy in now?
So I think this is really about the long game. And so we always return as early stage investors to the origin story and why 9 years ago we were complete buyers and why we are still buyers of what the vision is. And I think the really unique nature of this business is that this transportation revolution still hasn't played itself out. There's so much more to be done. There's so much more to go. So if you think about the potential of network transportation, as Mike talks about it, the ability for people to not just share the ride, but actually figure out all the different ways in which they can get from point A to point B, whether that includes an autonomous vehicle or not. There's so many new ways in which we're going to be adding and thinking about transportation that is going to actually start to change where people live and how they make choices about where they go. And so we've just scratched the surface of what's possible here, and that's my excitement about the future.
Now, look, it's not unusual for a tech company to go public and still not be making money, but Lyft is saying they may never make money. They say in their risk factors, we may never be profitable. Why should investors buy into that, given the extreme nature of this particular case?
Well, I don't really want to speak for Lyft or their numbers too much, especially in a quiet period. But
please do.
Yeah, the way I look at some markets, the product is so compelling and the value proposition is so compelling, it will be satisfied. And ride sharing was just one of these ideas where I don't know if you remember the first time you ever took a Lyft. But like, you just knew instantly it was going to be a huge success and that people throughout the world would be energized to want to get to places this way. And when the market will be satisfied, sometimes the best way to create value is to move very quickly. And so our belief is that transportation is being reinvented and that it's a race to be the category king. And so in the early days, value gets created by gaining market share, by satisfying the demand. That's not always the right strategy, but I think in this case, the companies that have been aggressive and moved quickly have won over the ones that didn't.
So I agree, it is something that users want. It is something that I want. I've used Lyft several times. That said, what is the value of it? What is to say? Who's to say this isn't the next Snap, where you go public at a big valuation and then a year later it's worth a third of what it was?
And again, so in the quiet period, there's very little that I can actually say about the company specifically and the financials specifically. But I kind of return to that notion of when you look at the original pitch deck that John and Logan pitched, you look at the founders' manifesto, and then actually the founders' letter. There's this incredible consistency to why they've built this business. And oftentimes, Mike and I are looking at a company, and we're investing in businesses that we believe will be here not just 10 years from now, but 25, 50 years. And we call these thunder lizards, we call them legendary businesses, whatever you want to call them, right? We want to see companies that have this incredible length in terms of the story that they have. And one of the things that we've seen consistently is that these companies that have that characteristic have this storyline to them that's consistent from not only day one, but it goes throughout the length of the story of the business. And when you compare these three documents that I've seen, there's this incredible story of why this company needs to exist and why we believe that investing into these founders, 9 years ago was a good idea. That story is so consistent. And that creates an authenticity that we absolutely love in founders that we invest.
So what that analyst said earlier, there's not enough information, I can't build a model, that doesn't concern you?
Again, these are not things that I can comment on.
Well, here's something maybe you can comment on, and we can transition to Floodgate's business. You invest super early, and I think we give so much attention to SoftBank, which is making these massive investments, but you invest so early that your returns are massive. Can you share or do some of the math for us in terms of how big are your returns in this case, and how does that sort of shed light on your model in general?
Well, are you comfortable saying what the valuation was you invested in?
Yeah, we invested in a $5 million valuation.
Wow. So many, many times.
Yeah, it'll be, I hope it works out.
It's a good one for us.
Yeah.
So then, Mike, walk us through how this strategy has paid off for you. I mean, you were one of the first guests on this show, like almost 10 years ago now, and this was kind of a new thing, what you were doing, micro investing.
Yeah, well, I think there were a couple things. One was the dollar amounts that we wanted to invest in these companies. We saw lean startups becoming a thing. But the other thing that we were really excited about was democratizing innovation, and this anybody could be an entrepreneur. And so I decided it was an incomplete firm if we weren't gender diverse. And so I tried to talk Ann into joining. It took a while.
You figured this out long before anybody else did.
But here's what's interesting, and in a good bit of karma, one of the early companies that Ann backed, I think it was TaskRabbit, may have been your first even, and in a feat of karma, I suppose, Leah Buskey is who introduced us to Logan and John. And so I guess karma kind of worked its way around for both of us.
So where do you see the biggest opportunities right now? What trends are you excited about?
So the main thing I'm interested in is what I call putting an Iron Man suit on the solopreneur. And so a lot of the first generation on-demand services.
You can add an Iron Man suit to
so there's
Thunder Lizard collection.
Yeah, so a lot of too many metaphors, but a lot of the early on-demand services, Instacart, DoorDash, things like that, try to commoditize the person doing the delivery or try to commoditize the person doing the service. And we think that there's going to be a new type of service provider that we like to call on supply, where rather than robots eating the jobs, AI and software are going to allow individuals to force multiply and find customers and serve customers and have a billing system and a back office. And so there's 5 million gig workers, but there's 50 million solopreneurs in the United States. And I think that the next set of things we really want to look for are going to be things that empower those people, and that there's a little bit of a conceit, I think, in Silicon Valley that doesn't recognize that there's a whole lot of people who have self-starter instincts and can make things happen and aren't just passive consumers.
What do you think about the techlash that's happening now, the backlash against Google and Facebook and Amazon and big tech? Do you think that's a lasting phenomenon?
We've seen this story roll out before, right? So every time there is a massive technical shift, a gigantic set of monopolies is created. So if you think about, processing power, IBM and DEC were huge companies in that time period, but ultimately microprocessors come along and disaggregate the power that they have, and Microsoft and software becomes this huge thing. But then the web comes along and Microsoft's powers ultimately decrease, and then out of that, a new set of monopolies, FANG, emerges. And what you notice is in that storyline, every time that monopoly power looks totally invincible, that's when the next set of incredible monopolies is created.
So you were an early investor in Twitter. We've talked a lot about Facebook, the controversies, yet another one. The passwords of hundreds of millions of users were visible inside of Facebook. Do you think there's something that can, a social network, a new social network, that can disrupt Facebook at this point, or is the scale, is it too big of a monopoly?
Yeah, I look at it a little bit differently. So nobody really replaced the mainframe or replaced Windows. I think what happens is there's usually a new thing that emerges where a lot of the energy and investment goes to. And so that's what we're really interested in, is what will be the next set of companies that perhaps leverage decentralized data, or democratizing the things that those companies are now aggregating and creating monopolies around. And so that, and I know that it's about to happen, because every time the government starts to potentially go after monopolies, quote unquote, the next great thing is about to happen. When IBM was in the middle of a lawsuit with the government, that's when Microsoft happened. When Microsoft was in the middle of a lawsuit with the government, that's when Google happened. And so, it's ironic how the government action never really remedies the current monopoly, but then again, it never ends up mattering, because the technology industry is just so regenerative that new architectures emerge and makes it irrelevant.
So do you agree that the power, even if you call it a monopoly or not, of Facebook and Google and Apple and Amazon will decrease and something will replace them?
They have to, yeah. So right now their power comes from the ability to aggregate so much data. So I call them data monopolies. What will disaggregate that is the technology that enables you to completely federate your information to the edges of the network, and then actually apply intelligence to them. And so like the kinds of things that I'm looking at today, I call federated intelligence. That's where all of the incredible things that happen around mutating models happen at the edges.